Welcome back to channel. For those of you who do not have an account to buy, sell, and trade signals, you can open an account on the exchange and join the free signals group by following the link I put in the description to receive a lifetime transaction fee discount. Please subscribe to the channel and turn on notifications to receive the latest news and offers and today's information. Identifying and understanding channels is an essential part of a comprehensive analysis to help. You identify overbought and oversold zones and let you know the overall market trend. To identify this, traders will typically use the line tool to draw a line from two swing points parallel to each other, with hopes that this identifies surplus and deficit areas that will act as reversal zones, but by manually doing this, traders often make mistakes, and the levels are rarely accurate. However, there is a far easier way of doing this that not many know about. This tool automatically draws these channels for you. It will provide 6 different standard deviations with varying significance. It will identify a separate channel from a higher time frame. The channels will also update in real time with zero input from the user. It will also provide a moving average to gauge the internal slope of candles and even identify high volatility bars that can be used for taking trades. The indicator we are talking about is the linear regression channel created by DGT, and today we are going to show you how to get it for free, how exactly to read the indicator, and we will also provide a strategy you can start using today to increase your earnings in the market. So let's get started. Let's first add the indicator to our chart. Click on the Indicators tab and search Linear Regression Channel, Curve, Slope. Click on this one by this user. To add it to your chart, ensure you are on a 30-minute time frame or lower once added. You'll notice the indicator immediately draws 2 channels for you. Let's quickly go into the settings by clicking this gear icon to adjust a few options. First, we can see that the channel stops at the current candle. We want to enable Extend Line to have it plot beyond the current candle, allowing us to see projections. Next, let's increase this option to the daily, for the second channel to be plotted based on the daily time frame. Next, we want to enable True Colors. This will color the channels based on the slope. So here we can see we have a bullish channel and an internal bearish channel. If we continue down, we can see we have regression curve and regression bands. These can be enabled to provide an additional layer of confluence when trading mean reversion strategies. The regression curve can be adjusted by changing this value and can act as a trailing stop, while the bands can help further confirm the market is overextended. Next, we want to go down to ATR length, and we want to ensure this is enabled. This will detect candles that are significantly larger based on the ATR value. These candles can be good indication of increased volatility and can be a good sign to enter the market. And finally, we want to disable volume spike threshold to remove the candle coloring. That's all we need to adjust for now. The indicator plots these 2 channels each with 6 different sections varying in significance. If the channel is bullish and price is retracing to the SD3 level, this would indicate that the market is very oversold, and you would expect a reversal back to the equilibrium, which is this middle line. However, aside from the slope, it can also be used to determine trend, as if we have a bullish channel and the price trend is maintaining above the equilibrium. This could indicate a bullish trend. You would not expect a reversal until price gets to the third standard deviation, at which point we can use the internal channel for further confluence on reversals. For example, here we can see price has retraced into the upper third standard deviation of a bearish channel, and if we look at the internal channel, we can see that it's a bullish channel, so we can wait for price to move into the upper overbought area of the internal channel and seek an entry back to the equilibrium of the daily channel. When taking these trades, you would always want to set your stops 1 deviation away from the current area of the daily channel. Another way of using this indicator would have you wait for both channels to be aligned, which most of the times will mean that price is maintaining above the daily channel's equilibrium. Wait for a lightning icon to be plotted on a candle below the equilibrium of the internal channel, and execute keeping stops one standard deviation away and targeting the upper deviations of the daily channel. When doing this method, while not necessary, it is a good idea to ensure that the entry candle for a bullish trade is bearish and the entry candle for a bearish trade is bullish. This will allow you to get a better risk to reward typically above 1 to 1.5. Once you have executed a trade, you also have the option of using the regression curve as a way to trail your entries. Here is another example. Here we can see that both channels are bullish and we have a lightning icon plotting below the candle. We will execute with stops at the standard deviation and allow the trend to run. At this point, where price is now maintaining above the regression curve, we can now use this as trailing stop, and in the event price starts closing against us, we can exit our positions, ensuring we secure some profits. Next, we would want to identify areas in the market where the channel lines intersect. These can act as important support and resistance areas. Here we have two lines that have intersect, so we're going to go ahead and mark that level. As price moves, the channels will change in real time, so be prepared to have your areas adjusted. Now, as price approaches this level, we can see that we are getting some rejections from this zone. These levels can be used as important take profit or entry areas. Here is another example. Here we can see we have a sell setup based on price action analysis, and below this level, we have an area where the two channels intersect. Though my target is lower, I will keep this level in mind as price approaches. If you are enjoying the video, don't forget to like and subscribe to not miss out on future videos where we will be providing even more advanced strategies